Hi folks, Scott here, and this is the wrap for Thursday, October 24th. So this is the 5-minute chart of the past few days. We had the island gap reversal, or the island gap reversal as of yesterday, and then today we've gone up and, for all intents and purposes, filled that gap. Markets don't like to leave unfilled gaps, but happens probably more frequently than people realize. Interestingly, I just ran a study. I'm going to show you a variation of it in just a moment. I ran a study looking at how many times have we had at least a 20-day high, followed by a lower close, followed by a higher close. How many times did this higher close, being today, close above the close of the day that had the 20-day high? And out of the number I'm about to show you, there's 30-something total trades, maybe 40. Only happened 3 times. So not likely we're going to rally, but I wouldn't put it past the bulls even now. I'm doing this wrap while the market's still going. Got a webinar this afternoon. It's about 3:40, so it'll be interesting to see how it finishes up. But let's look at just what are the odds of fading gaps after a higher close, after this 2-day pattern I just mentioned, and that I'm showing here. So my key assumption is that we close above the blue line, which was yesterday's close from yesterday, and that looks pretty safe. We're up about 5 or 6 points right now. So if we by chance close below the blue line, then the data I'm showing you is not relevant for tomorrow. My apologies. Okay, it's happened 32 times. Using an end-of-the-day stop, down gaps have looked off the chart good, 11 of 12 wins. Even the average winner is not real big. Let me make sure the settings are... It's end of day stop, so not a very large loss in either direction. And shorting an up gap has been comparable. Average win is a little bit bigger. Win rate not quite as good. So basically, odds favor gap fill tomorrow based upon this one highly nuanced and unique pattern. And as always, I'll defer to our gap guides and my worksheet that our members will have access to starting now at 5:45 Eastern Time. Thanks to the request of some members, we changed it. But going into tomorrow, it's Friday also. Last Friday was not great. It won't deter me from trading a gap if it meets the criteria tomorrow. So we'll see. All right, let's look at what we showed going into today. It looked like we were going to have a pretty sweet looking setup. We did for a while. I was unable to trade early, though I wanted to. I will say that, and you'll see why I wanted to in just a bit. And that's not just because I did not trade. By the way, I did not trade day's gap and did not capture it. It sort of melted away in front of me. I had the thought of doing it without knowing how it was going to turn out. Not the thought. I wanted to. I just literally was too busy this morning. I had a webinar this morning as well. Tim was moderating the room. Too much going on. And my first responsibility was to make sure I've got my plan squared away for trading the open and communicating that to our members. All right, so here's what the worksheet showed. Any gap up above the prior highs was historically really profitable. It's made 54% more profits than losses. And that's the average of all 8 indices. And it's had a win rate of about 60%, right at my criteria, just 1 percentage point lower. And it's favored hitting the extended target. 83% of us hit the extended target. Anything less than that, inside the highs, it sort of didn't look as good. Unique patterns, unfilled down gap under similar market conditions. Not very good. That's what it shows there. Neutral at best, if you want to interpret it that way. Unfilled gap after a hammer candlestick, defined right there. Has been good. So that was a positive. And let me show you the individual gap guides real quickly. Because the problem we had is that unfortunately everything did not open consistently. The ES and Dow did, but the Russell and NASDAQ actually opened down. Let me think if that's the best way. This is the best way to show you. Well, I'll just go through real quick. You can see the DH looked good. DHO looked okay too, but again, the data started getting a little bit choppy. YM looked good. NASDAQ opened down, so in general, that's a deal killer most of the time for me. because if it catches a bid and rallies, it put counter pressure on my fade. So it opened in the DCL zone, and then the Russell was just a tiny gap up in the UCO zone, which was not very good. Looking at the ETFs, DH still looked good. Same with the diamonds. DCL was okay for the Qs. I'm assuming the ETFs open in the same zones as the futures. If not, then disregard. So you can see it just wasn't quite as strong with the way we open up. If everything had opened above the prior highs, then for the most part it was looking pretty darn good. So here's what I wrote in my pre-market comments. For last night's wrap, the island gap pattern for up gaps has been strong. These medium and large up gaps defined as greater than 1747 after an unfilled down gap when above the 10-200 has been weak. So gap size was a concern. Overall, the data was mixed. Unique pattern data was mixed, but the guides were pretty good. So I said if the ES opens in the DH zone greater than 1744, but less than 1747, by the way, if I don't ever reference a specific level, tip here, just scroll up and you'll see it unless I make a mistake. The majority of the time I'll reference it, and here it was here. That's the 40% level. 40% of the 5-day ATR. It's almost a magical level in terms of what it does to probabilities. But I wanted all three futures opening above the prior high so I could have all of them moving in lockstep, all of them with good probabilities. And again, as I showed you, the NASDAQ, well, I didn't show you, but the NASDAQ up and down, let me show you. And that killed the deal for me. So see, we opened, the white dotted line is the open, 1744.25, just a tick above the green line. Russell was just a tick or two above its prior close, so no real gap to speak of. NASDAQ gap down below the blue line, so that was a problem. And sure enough, I mean, it rallied. Took a little bit of heat there, which helped the ES fill, and then the YM never filled. So technically missed a winner. I'd miss it again over and over and over. Happy to, especially in this raging bull market, which you've seen it again today. Just not going to take a chance without markets set up a little bit stronger for me and my core count. So 15-minute and first hour range guides. 15-minute favored the high fade. I don't know if it triggered or not. Let me see something. The high 1745.25. Yeah, so the 15-minute high was triggered. It had a 4-point target, and it nailed it. I did not take it. It was really strong in the ES and Spider, but it wasn't supported by the markets. I generally don't do range trades unless it's supported by the other markets. So I did no trades whatsoever today, which is a little bit unusual. But that was my day, and that is the wrap for Thursday, October 24th. Have a good one.